What's up team, welcome back to another weekly analysis video. It's currently the 12th of December, so pretty much almost Christmas now in a couple of weeks. The volume in the market is probably going to drop off, as we'll see. But regardless, let's cover what we've done last week since I posted last week's market analysis. You can see on screen we made 1% total on our swing positions. Not expecting anything crazy to happen for year end, but that's just how it is. I said it before and I'll say it again, now's not really a time that you want to be diving into too many trades. There is some trades that we're looking at entering because there's some really good setups in the market. I'll just summarise an overview. Basically, last week we saw a very strong yen, which gave a lot of pullbacks on pairs like Aussie JPY, New Zealand JPY, Swiss JPY, pairs that have been on a really strong bullish streak. We saw a big retracement from those last week, and following our strategy, we've got some really good potential setups. Just some final setups to finish the year off with. I won't be looking too much at day trading, because we've pretty much just got 1 week left of activity. After that, trading is going to be pretty flat until New Year. So all the trades that I'm entering now, I'm not expecting to hit any take profits. That's okay for my swings, but in terms of day trading, where the stop losses are closer to entry in terms of pips, I don't really want to hold those over Christmas. It's just like you would intraday trade, you wouldn't really hold an intraday trade after the trading session. Hence, it literally being intraday, like you're in and out in the day. Day trades, I like to be in and out within a matter of days, so I don't really want to be holding them for weeks. So the swings, yeah, I'm fine to hold the swings over Christmas. Fine to enter new swing positions to hold over Christmas. I will be a lot more cautious when doing so, though, just a point to note. And you'll see from some of the entries that I'm looking at, we are being even more cautious than usual. So let's get all that out of the way and just get into this week's video. So in terms of swings from last week, we've got a lot of NFAs again. The pairs that we're in are sort of narrowing down now because I've not really been trying to increase the activity coming into a lesser activity trading period, so to say. So Aussie JPY, nothing. CAD Swiss, nothing. CAD JPY, we hit BE on the final portion. Euro Aussie dollar, nothing. Euro Swiss, we had a first take profit on that. Euro JPY, this was a stack trade and we hit minus 1% on that, sadly. Pound Swiss is break even. And then the final two pairs, nothing. So total change this week is 1% on the swings. Obviously 1% to beginners might not sound like a lot. It's not, in all honesty, but if you're making 1% a week, think you've got 100k funded account, you make 1% a week, you're making £1,000 a week. And this is from literally information that I gave you out for free on YouTube. So yeah, 1% a week, you can't complain at it, especially this time of year. So let's just get into how that actually looks on the charts. So Aussie JPY, as I mentioned, the yen was really strong last week. We had a huge reversal from this position that was all the way up to TP2. At one point, this was running at about 5.5R in the positive. Price came all the way back, nearly at break even, didn't hit break even, pushed up, respected the trend line that we entered off of, I believe. No, this is a new trend line. This was the trend line that we did enter off of. So we had 1 touch here, 2 touch there, 3rd touch there. This is where we got our entry. This new trend line is for the possible re-entry, okay? So let's move this to the left. We've got 1 touch here, 2 touch there. We've had the 3rd touch now. However, I've been a bit more cautious, especially since this was more of an impulsive down move. I didn't enter right away on that, but we've left it over the 3-day period, and we've seen that price did manage to close above, back inside the trade. Back inside the trend. We see that price did respect the 3-day EMA again. So we've got, let me get my better mouse on. We've got this whole area where the EMA was respected. Every single time price tried closing below, it failed and closed above. You see we had a nice supportive reaction there. Same again here. Price tried closing below, couldn't. Price tried closing below, couldn't. Price tried closing below, couldn't. Yet again, price tried closing below this EMA and it couldn't, and it came back inside the trend, back above the EMA. So here's a very good potential setup for us. So we'll take the Fibonacci from the last significant low to the last significant high, which is there. We'll look for an area in between the golden zone, if ideal, which is also a quarters level. The area that stands out to me though is these group of lows. So if I plot my line there, and we see that's on the 94 level, what we'd be looking for here is 1 touch, 2 touch, 3rd touch. EMA is being supported. We're looking for an area within this zone. I think I kind of like the 94.25 better, just because it's quarters level, it's in our golden zone, and it's also on the liquidation of this recent low. So here's the potential re-entry that I'm looking for. Notice that I didn't enter the first time it came down. I didn't just have a buy limit sat waiting. So I looked for the previous wick rejections, which I'll show you now. So price came down to these recent lows, liquidated them and pushed higher. So that shows that a lot of stops were waiting at this sort of area underneath those lows. Once price came down, those got liquidated and that pushed price higher. Now, when prices came down to our zone in question, we've had a day worth of rejection and we're seeing the positive reaction. What we're going to be looking for now is price to give that price a retest. So we're looking for price to come down, test the zone, see if it is actually strong enough. At that point, we'll get an entry and hopefully price will continue higher. So what we're going to do, don't be confused by all the lines on the screen. So this was our first take profit on the original trade. This was our second take profit on the original trade. And this is our third and final take profit on the original trade. Now what we're going to do is the same thing. Look to take TP1 at the recent high. Look to take TP2 at the 23% extension. And look to take TP3 at the 61.8% extension. So this will be a 5.1R trade overall. And I guess we'll just wait to see if price comes down to retest that level and goes higher. We've got our stops below the last significant low. What that's telling us is if price does have another sort of impulsive move down, we'll get stopped out. And at that point, price has basically decided that it's no longer in this uptrend. If price does fall below this low, it's a pretty good indicator that the uptrend is finished and that we're now moving into a downtrend. We only want to trade if there's an uptrend, okay? So at that point, we're cutting out losses. So notice that I'm only entering 0.5% back into this trade and not 1%. We do have another 25% runner on this position here. So we've still got about 0.25% entered. So if price does come down and push back up, we've still got 0.25% and 0.5% there. However, the reason that I'm entering 0.5% instead of 1 is because I'll be looking to do the same on New Zealand JPY, which are two highly correlated pairs at the moment in time. So instead of placing 1% on AJ and 1% on NJ, that would effectively be the same as placing 2% on the same position, which sometimes is okay, depending on the rest of your portfolio. But given that in this moment in time, we're not looking to enter many pairs, just due to the time of year, I'm going to enter 0.5% on this and 0.5% on the NJ position that I'm looking at too, effectively spreading a 1% risk over two trades that are effectively the same idea. CAD Swiss, this one's looking nice. It's hit our TP1. You can see that price is trying to reach back down. It's had a moment of consolidation at these recent lows, which we said it would, but price is either going to come down and hit our TP2 or price is going to retrace back up. When price does retrace back up, I will be looking for a re-entry on this. I think just based off the EMA's been respected well, it looks like price is going to push back down. So I probably will look for a re-entry on this. Given that we've already cashed in on the first position, it's at stop loss to break even now, and I think we can ride this even further to the downside. CAD JPY, this one got stopped out at break even. However, we did hit TP1 for 2.8R and we did hit TP2 at about 3.7R. So we did actually cash in money on this. That trade would have looked like that. And then the final 25% of the position, which we left running for TP3, that one has now came out and spiked us to get stopped out at break even. So I'm not looking for a re-entry on this trade. The past few weeks I've been saying that as prices came up, there was this double top there. This double top there, the price double topped it again. The market was just, in this sort of range, just bouncing off those highs and those lows. So I wasn't really looking to re-enter at all. Prices broke out of the lows. What it might do is retest this area of support, which was old support, and then come back down on the downside. So I'm not looking to re-enter this position at all. It looks like the uptrend's broken and we might have a period of downside. I don't know if that's going to be a sort of long-term sustainable downside, or whether it's going to be, let's just delete those, or whether it's simply just a sort of retracement to then go higher, cool off some steam. So we'll just stay watching this pair for now. There's no reason to enter. It's a little bit too early to say yet, so we'll just remove this one from our position, stay on the sidelines with it, and then see how price develops. Euro Aussie dollar, we're still in this pair. It's had a really nice entry at 1.585. Pretty perfect entry. We've hit TP1, we've hit TP2. We didn't look for any re-entries just because price didn't look like it had the momentum. Regardless, we're still holding this trade. Not particularly looking for any re-entries yet. It looks like price has had a nice support off of the weekly EMA. But again, like I just said, I'm not looking to re-enter, but based off that, I'll just hold and see what happens with the pair over Christmas. Euro Swiss franc. This one's looking nice. So we had this downtrend. We had the EMA, which was used as resistance. We had the sort of golden fib level from this high to this low. Golden fib level was there, which we got a reaction from. Looking at the lining of the trend line and the EMA, which was resistance, I knew that we could probably get a higher entry. So I set our entries based off this sort of structure level there at the psychological level of 0.965. That's where we got our entry. Price failed to sort of stay closed above that EMA and outside that trend line, so it came back in. We dumped to the downside. This is a nice 7R trade in total. The last TP was 4R. We cashed out 50% there, so that was a solid 2% trade so far. Obviously, price is still open at those lows. Not sure if over Christmas this fair value gap might look to get filled. Maybe tap the trend line in the EMA again, giving us a re-entry. If not, price will keep going down and hit our overtake profits, which will be lovely. Euro JPY, this one had a bad week. So we had the initial entry as I showed last week, which we closed out early for 0.5%. It looked like we were gonna sort of get tapped in on the 3-day here after we had that rejection on the way down. But like I said, Euro had a phenomenal, Yen had a phenomenal week of strength, which pushed the yen pairs down. Unfortunately, this one got tapped out for a -1% this week, so you don't win them all. This was the only losing pair we had from the swings this week, so we had the 1-touch, 2-touch, 3-touch there. Everything was valid. It's just sometimes, you don't win every trade. It's just reality. With this strategy, you have high R's and kind of a low win rate. So I've done the maths to prove this strategy works. You've seen week in, week out the results and the sort of change in positions each week. This week we made 1%. This just happened to be one of the trades that we lost. So I'm going to remove that one so far. Price did actually respect the 3-day EMA. It just wicked below this low quite tremendously. The yen pairs can be quite volatile like that. I'm not looking for any re-entries on this anytime soon. It looks like the weekly's going to have been supported. Could have even looked for the weekly trade. No, the trend line doesn't really line up. I'll just stay watching this pair for now. It doesn't look like there's anything we can do about it at the minute. The yen pairs are really volatile. I'm hoping that they're going to settle at the moment and carry on their up streak. So we'll just see what happens with them. But in terms of Euro JPY, I'm just going to cross that one on for now. pound Swiss on the 3-day. This one had a really nice reaction to that previous resistance. So we had a 1 touch, 2 touch, 3rd touch to make the trend. We had this previous area of support, the price broke beneath, came up and acted as support. Now price is pushing to the downside. We've hit our stop loss to break even level within the past week. So this one is now risk free, purely just trading for profit. We had the longer term downtrend. So this 1 touch, that 2nd touch, which came and acted as even higher confluence to make the 3rd touch there. So where we entered, or just after we entered, sorry, was 2 separate trend lines which were obeyed. Our 3-day EMA was obeyed. This previous support to resistance was obeyed. The psychological level that we entered at, so 1.1125, which is a multiple of 25 pips, so it's a quarters level. And the golden zone of this high to this low came up to our perfect fib ratios there on the fib levels. So all of that was great confluence, and that's why we took the trade. And now I see prices heading to the downside. I'm really interested to watch this pair from a day trading perspective as well, given that Euro Swiss is now at its not all-time low, sorry, but Euro Swiss is at its recent low, and Pound Swiss is yet to be at its recent low, but these two are 75% correlated. As you can see, when we plot those two on the same graph, you can see that Euro Swiss and Pound Swiss hit their low there, came up, retraced at the same level. Now Euro Swiss has came and hit its recent low, but Pound Swiss hasn't. So we have a really strong indication to basically say that the Pound Swiss should hit its recent low, which is in line with our trade anyway, but it's a really strong bias to sort of take day trades on. So that's something me and the VIP members are going to be watching closely in the coming week, and also coming into New Year if that level hasn't been hit by them. New Zealand JPY, so we had 1 touch, 2 touch, 3rd touch here. We had this very strong previous structure, which is at the 87 level. Obviously a very strong psychological and very strong quarters level. This was in line with the fib level from this low to this high. So we had this wave up. Price came down to the 87 level, which was between our golden zone. So we have the EMA, we have the trend line, we have the structure, we have the psychological level, and we had the wick rejections as price came down, gave us the candlestick rejections to say that sellers were wanting to turn into buyers. We entered at this level. Price is now pushed up. We've hit take profit 1 for 2.25R. We've hit take profit 2 for about 3R. Now, in the past week, the yen strength has dumped price off from TP2 down to back to our EMA. So what we're looking to do here is place a re-entry. As I previously mentioned, we've got, let me move these out of the way. We've got 1 touch here, 2 touches there, and our 3rd touch here, which you can see we've already had support off on the 3-day. The EMA got tapped and rejected. The trend line got tapped and rejected. So we've pretty much got a very strong reason to enter this trade. What we'll look to do is take the fib from the last significant low to the last significant high. Up there. We'll look to basically find a psychological level in between our golden zone. So you see 88 stands out. Then we're going to sort of check to see if there's any previous structure. Yep, so this previous high was there. This high almost tapped it, just missed. So I'd say 88 is a pretty strong level to look for an entry for here. So if we look on the daily, you can see from our level, we had a daily candlestick rejection, followed by a bullish engulfing. So this showed us that the sellers which were driving price lower have sort of converted into buyers here, and price is wanting to reverse and push higher. Now, since we are trying to be a little bit risk off at this time of year, we're going to wait to see if price does retest this level. At that point, we'll look to re-enter and hopefully push price higher. As I've said, this pair is pretty highly correlated with AJ, Aussie JPY. So we're going to place 0.5% on each of those. If it's the case that one of them gets tapped in and the other doesn't, we've just got a 0.5% trade. But that's fine because we've also got 2 trades still running. This one and the previous trade we had on Aussie JPY as well. So it's really not the end of the world to trade with lower risk. You know, it's pretty smart, it's pretty safe. So that's what we're going to look to do. So we've got the original position there. And then what we're going to look to do is take a re-entry if price gets down to our level. Have our stops 5% below. And have our take profit all the way up there. With it being a yen pair and the yen pairs being volatile recently, I'm actually going to put this at 10% below the low just to be safe. We've still got a 3.8R trade. And then likewise, let's put our take profit levels in. So TP1, TP2, and TP3. So there's another pair that we're looking to enter. We'll be quite risk off with this one though, just based on the time of year, based on the recent yen volatility, and based off the fact that we've got another very highly correlated pair that we're looking to enter in a sort of low activity moment. So those are the 2 trades that we're looking at taking. I'll set my alerts on that. How about the 61.8 level? So yeah, USD Swiss is the final position that we're in. This one, again, is just pushing nicely to the downside. With it being a weekly trend, this is slower than the other trades that we've been taking. Yet to hit TP1, but this one has its stops at break even. Just to run through this trade again, we've got 1 touch there, 2 touch there, the 3rd touch was here. We had the EMA that was being used as resistance, acts as resistance again. We had this previous high that got liquidated on our entry. Price failed to close above our level for 2 weeks in a row. Price entered at the level, came higher, but failed to close above. Second week, price came higher, failed to close above. That was really good confluence for us. And as you can see, that was a pretty good indication that price, the uptrend here, reversed at this point and became a downtrend, which is literally what we're trading off, guys. So at the moment, we're just waiting for this to hit TP1. We may look for some sort of re-entry, but I'll alert the members in the VIP group about that one. Nothing just yet. Just waiting for this one to play out. So those are the open pairs that we're in. We've got 1, 2, 3, 4, 5, 6, 7 over Christmas. So I don't really want to be too exposed. So we're just kind of playing it safe at the moment. No real reason to go all out. So since we've only gone over 2 positions that I'm looking to enter, here's a third. We've got Aussie CAD, which was in a downtrend here, broke out of that downtrend. Instead of lower highs and lower lows, we're now making higher highs and higher lows. So we're looking to trade this to the upside now. You see the daily EMA was respected. It was used as resistance on the downside. Now it's being used as support on the upside. Looking for that to come in again. We've got the daily and we've got the 2-day EMA that have both been respected previously. So we're looking for a sort of best line with those. It currently looks like the daily. So we've got this daily open and this daily low there forming our trend. So we're looking for the EMA to act sort of in confluence with that trend line. However, if price comes down at the moment, the retail client sentiment is currently bullish. Now, I only really trade against the retail client sentiment based off the fact that around 90 to 95% of retail traders lose their money. Why would I want to trade in line with them? You know, I'm only going to trade against them in confluence with all the other technicals that we've got. Okay, so I'm more favouring the 2-day EMA, which is essentially the 100 daily EMA. So we're still trading daily price action here. We're just sort of manipulating the time frame so we can have one line and have a neat chart, which is what we do. So looking for price to sort of come down to the 88250 level, which is in between the golden zone from this low to this high. At the moment, client sentiment is still bullish, so I'm not looking for it to get in any buys just yet. I'll wait for price to come down a bit lower, see if people stop buying it, and if they do, then I'm looking to buy and basically take out all their stops. So yeah, that's the free positions so far this week that we'll be giving away for free on YouTube. If you want to see the full list of pairs that we're looking to enter, as well as all the day trading activity and just further insights into all the trades, all the setups, all the analysis, so that you can better trade and take these positions like myself. Obviously, you've seen the proof in the pudding, you've seen the trade log, you've seen me literally give out positions each week, and you see them get filled, and you see us have sort of positive change in positions. Then get yourself inside the VIP group where you can learn how to actually master this strategy yourself. You can post your charts in that you've analysed yourself, and we'll offer feedback on those, as well as just being around a trading centered community who all trade the same strategy, which is so useful. Currently it's only £40 a month, but I may look to increase that as spaces are starting to fill up, and the value that we give out is actually crazy. Like, I'll get you a funded account passed for relatively cheap for the amount of capital that you'll be trading with after. And then you can literally make insane returns, guys. Like, if you had a 100k funded account, you placed a 1% trade for our activity last week, you'll have made £1,000 last week. And that's only for £40 a month. So that may look to get increased pretty soon. So I'd join that while you can, while the price is still low. You know, buy low, sell high and all that. So yeah, hope everyone has a great Christmas, guys. This will probably be the last video that I do before New Year, just because nothing's really going to happen. I don't want to encourage anyone to trade over the Christmas period. It's a great time for backtesting and reflecting and education, as opposed to it is executing. So on that note, hope everyone has a great Christmas, and I'll see everyone in the new year.